us today for this roundtable Finance to Protect Biodiversity. But before welcoming our panelists and diving right in, I would like to welcome for a digital live introduction a guest speaker in the person of Elisabeth MREMA, Executive Secretary of the UNCBD, the United Nations Convention on Biological Biodiversity. Elisabeth, you're on screen.
Thank you very much. Yes, I am. Greetings in Paris, and thank you for inviting me to initiate this roundtable on biodiversity at your 7th Climate Finance Day. 10 days after the closing of the first week of the CBD Conference of the Parties 15 and the adoption of the Kunming Declaration and so many commitments made by governments and stakeholders, this is indeed an important event on the road to Climate COP26 next week and to our own second part of COP15 in April next year, where an ambitious and transformative post-2020 global biodiversity framework will be adopted. It will be our framework for the next decades to come. It was mentioned several times last week that involvement of all actors besides government, including business and the public and private financial sector across developed and emerging markets will be fundamental to the successful adoption of our common framework and its subsequent implementation. It was equally mentioned at the IUCN Congress in Marseille in September. Tackling biodiversity loss by aligning financial flows with global biodiversity targets will be an important part of the solution in terms of climate change, poverty reduction, and equitable development, particularly in developing countries. By integrating nature-related financial risks, impacts, and dependencies into your investment decisions, by scaling up nature-positive investments in nature-based solutions or restoration of degraded ecosystems or support to sustainable agriculture, fisheries, or infrastructures, and finally by disclosing your nature-related financial impacts and opportunities, you will really make the difference. But there remains a huge challenge to translate the value and complexity of nature into financial terms in a way that is decision-ready, credible, and meaningful to all stakeholders without losing sight of our goal of reconciling economic development, biodiversity, and climate mainstreaming and social justice. The Task Force on Nature-Related Financial Disclosures, or TNFD, for which I'm privileged to co-chair, will help you to do this. Several representatives of French financial institutions like HSBC or AXA, who are with us today, are also members of the task force. The French Development Agency will lead public development hub that will complement the experience of the private sector. I thank you all for the work you will be doing in the coming months to develop the task force framework in line, hopefully, with the align, hopefully, with the global biodiversity framework. The role of central banks is also key, and I welcome the work done by the network of greening the financial sector on biodiversity and financial stability, as well as the recent research carried out by the Bank of France. It demonstrated that 42% of the number of securities held by French financial institutions in 2019 were highly or very highly dependent on one or more ecosystem services. To accomplish this important task, as well as other actions will necessarily need to be taken, such as development of regulations and tools. You are already ahead in France particularly with Article 29 of the Energy and Climate Law, the development of tools such as the CDC Global Biodiversity Score, and many others. All your actions are very encouraging, and I'm sure I've not mentioned all of them. They need to be followed by concrete action on the ground. Your commitment will facilitate the recovery of natural ecosystems and contribute to the achievements of the Paris Climate Agreement, as biodiversity loss and climate change are intrinsically linked. I wish you a good roundtable, and it's really time to make the really impact, and I do count on you to help us in this process. Thank you very much.
Thank you very much, Elizabeth, for this very convincing introduction. And we have another guest speaker for this introduction in the person of Bérangère Abba, which should be on screen in a few seconds as well. Thank you, Madame la Ministre, for being with us today. Few seconds of patience, please.
Bonjour à tous. Le constat est clair, il est largement partagé. L'IBES, le GIEC de la biodiversité, l'a clairement établi. Nos choix en termes de modèle de développement et d'économie impactent très directement l'environnement et la nature. Nous l'observons depuis plus d'un siècle, l'accélération de l'artificialisation des terres, la surexploitation des ressources, l'accélération du changement climatique, la multiplication des pollutions ou encore le déclin massif d'espèces en sont les manifestations les plus alarmantes. Nous en payons et en paierons un lourd tribut à travers la raréfaction des ressources naturelles, une moindre productivité des sols et une dégradation constante des conditions de vie. L'OCDE a d'ailleurs chiffré ses services fournis par la nature à plus de 100 milliards de dollars par an, notamment via l'approvisionnement en nourriture, en combustible, en matériaux, la pollinisation, l'épuration naturelle des eaux et bien sûr le stockage du carbone. Face à ce défi sans précédent et à ces changements transformateurs impératifs dans nos habitudes et nos activités, la mobilisation doit être massive et rapide. Le secteur financier, les banques, assureurs, gestionnaires d'actifs et autres fonds de pension ont la capacité de réorienter les flux d'investissement vers la préservation, voire la restauration des écosystèmes. Une finance pro-nature est un levier puissant de préservation de la biodiversité. Vous le savez et nous le savons, mais alors comment y parvenir ? D'abord en apportant aux investisseurs des informations pertinentes et fiables sur l'impact des activités sur la biodiversité. Favoriser les financements favorables à la nature et sortir de ceux à fort impact nécessite de mieux savoir les caractériser. L'État français ne mésestime pas la difficulté de l'exercice, nous en faisons l'expérience dans le cadre de la mise en place du budget vert. La France est pionnière dans le reporting de durabilité des acteurs financiers. Nous nous sommes dotés dès 2015 d'un cadre réglementaire en matière de transparence extra-financière des investisseurs. La loi de transition énergétique pour la croissance verte imposait déjà la publication systématique des modalités de prise en compte des critères ESG dans les politiques d'investissement et les procédures de gestion des risques. Et l'article 29 de la loi énergie-climat, qui sera applicable dès 2022, améliorera ce dispositif en instaurant des obligations spécifiques à la biodiversité. Elle a également élargi le périmètre des acteurs financiers concernés à 230 sociétés de gestion de portefeuille, soit 99% des encours en gestion. Dès janvier, ces sociétés devront donc fournir des informations sur la stratégie d'alignement des entreprises dans lesquelles elles investissent, avec les objectifs de long terme liés à la biodiversité. Nous espérons ainsi inciter les acteurs financiers à s'engager dans des démarches crédibles où la biodiversité est un critère déterminant des décisions d'investissement. Sur le plan international, je tenais à vous réaffirmer également le soutien du gouvernement français à la Task Force on Nature-Related Financial Disclosures, qui a été lancée en juin dernier, suite à une phase de préfiguration. Nous souhaitons à la TFND autant d'impact que peut en avoir la TCFD, sa grande sœur climatique. Et le président de la République l'a souligné en ouverture du Congrès mondial de la nature en septembre à Marseille, il nous faut disposer d'une méthodologie commune. C'est un travail complexe mais fondamental en tant qu'outil d'aide à la prise de décision stratégique des acteurs financiers comme des entreprises. Certains d'entre vous ici y consacrent beaucoup de temps et d'énergie. Je vous en remercie très chaleureusement. Merci à Finance for Tomorrow d'avoir organisé cette table ronde. Je vous souhaite des débats et des échanges fructueux et je suivrai évidemment avec attention les conclusions de vos travaux. Je vous remercie, à très bientôt.
Merci beaucoup, Bérangère Abba. Merci, Madame la Secrétaire d'État. Et je voudrais accueillir maintenant notre panel, s'il veut bien monter sur scène. Tout d'abord, Marine de Bazelaire. Marine, vous êtes Group Advisor for Natural Capital with HSBC. And Marine, you'll provide us with the views of a global private financial institution. Jean Boissinot, Jean, you're the head of Secretariat at NGFS, Network for Greening the Financial System, whose main mission or objective is to embark the financial system in a green journey, while keeping a close eye on financial stability. Andrew Mitchell. Andrew should be over the air with us today. Andrew, I don't know if you're hearing us, but you're the founder and senior advisor of Global Canopy, and you were closely involved in the inception of the TNFD, the Task Force for Natural Financial Disclosure. Gilles Moëc, you are Group Chief Economist at AXA. You're also Head of ESG Research at AXA Investment Managers. And you'll help us navigate as an economist with metrics, frameworks, KPIs, and price signals. And finally, Marie-Hélène Loison. Marie-Hélène, welcome. You're Deputy CEO of AFD, the French Development Bank, and you'll give us, I think, a heads-on experience on a wide portfolio of development projects worldwide. So thank you all. We have 55 minutes, if I believe the counter over there, to cover a lot of ground. And maybe we could start by painting the global picture of where we are standing today. So to start with, biodiversity matters, and Bérangère Abad just reminded us with the order of magnitude. It's valued, the ecosystemic services are valued around 1.5 the world's global GDP. Where do we stand today with respect to finance for biodiversity? Do we see the beginning of a large highway, or are we at the bottom of a small, narrow, winding road? Marine, would you like to start on this?
Thank you very much. Thank you for inviting me to this important panel. Maybe to start with, I think it's important to remind what we're talking about. What is natural capital and what is biodiversity? We had that quick exchange earlier today. The way we see it within HSBC, the natural capital refers to the renewable and non-renewable natural assets, like air, trees, animals, minerals. And biodiversity is actually the variety that combined generate ecosystems services. And how it evolves, its variability over time, its diversity, and to make it short, we depend on natural capital, and natural capital depends on the health of biodiversity. So to respond to your question, are we at the start of a journey? I would say pretty much. We understand the materiality of the issue. It has been reminded by the Minister Bérangère Abad. 50% of the global economy is directly dependent on nature. And being said that, there are tremendous opportunities to fix, protect and restore natural capital and biodiversity. UNEP released a report earlier this year which actually states that the business opportunity could reach 8 trillion by 2050 if we only address 3 of the main sectors that are impacting nature: infrastructure, agriculture and energy. Being said that, we're not starting from nowhere. We, financial institutions, have a risk framework for a long time. Within HSBC, we have forestry policies since 2004, agricultural policies since more than 5 years. We are revising those policies regularly. Being said that, we understand that it's not tackling the entirety of the risks behind that. We also do have products. I mean, you may have seen that HSBC has launched a joint venture last year with Pollination called Climate Asset Management, with the aim to develop funds up to 6 billion investing in real assets, natural capital assets. Being said that, I mean, it's in a way the cherry on the cake. How do we address the transition to the entire economy toward that? And maybe just to finish on that, if we look at the need for financing biodiversity, I mean, it's estimated to 600 billion per year. We're only financing at this point 15%. And among that financing, 70 to 90% comes from the public sector, meaning the financial sector need much more tools to be able to reallocate capital toward a nature-free economy.
Thank you, Marine, and we'll come back to this massification issue. But Marie-Hélène, as Marine said, most of the financial flows come from the public sector today. What's your view on this as a development bank?
Yes. So I will not state the figures again. They've been exposed by previous speakers, but what we see today is the growing awareness that, of course, climate change is a major threat, but also clearly biodiversity loss is also a major threat for humanity. Why? Because, as was said, half of global GDP depends on healthy and stable environment and biodiversity. Also because we know now that degradation can lead to major financial risk and substantial cost to economies, and especially, of course, for the most vulnerable populations and communities, because they depend more on ecosystems for daily livelihood. And finally, because we know that biodiversity and climate change, and this is both a challenge but also an opportunity, are two sides of the same coin. So if we want to be net zero in 2050, that will not be achieved unless we're nature positive. So what is really at stake, and that's the case for both developing economies as well as higher income countries, is to finance more nature positive activities and also eliminate biodiversity net loss projects from portfolios.
Okay, thank you, Marie-Hélène. So we see that conscientization is underway. We see that there's still a huge gap to finance, given the number. Andrew, from Global Canopy's point of view, do you see an acceleration for the last 2 years? And how would you put words on this acceleration using definitions as well? As Marine said, vocabulary is important.
Yeah, hello, and thank you for the opportunity to speak here. I'm sorry I can't be in Paris, where I was last year at the previous meeting. Look, I've watched this over 40 years from the front line of conservation and more recently finance. And, you know, the finance sector and to some extent business has had a kind of booze and burger mentality towards nature over the last decades. We feast on it without too much thought about the consequences. We call these things externalities, economic externalities. So we live in a world of kind of false prices where the true costs of things are not in the share price or the products that we use. And so we're beginning to come up sharp now with the consequences of those actions. The first step on that way was understanding climate, which for many years was not taken very seriously as a risk for the finance industry. But now, since the Paris Agreement, has really accelerated dramatically. And two things really helped that happen, I believe. One was the Paris Agreement itself, 200 governments saying, yep, we're going to do something, we're going to regulate, and therefore there could be stranded assets. And secondly, you need a pathway to deal with that. And that was the Task Force on Climate-Related Financial Disclosure. It gave a kind of pathway. But with nature, this is coming up now really sharply, and more has happened in the last 2 years than I have seen happen in the last 40 years. And it's a combination of, understanding about plastics in the ocean, concerns about deforestation, demonstrations from young people in the street who are beginning to think about their money, and maybe it should be democratized and they should have more say on how it is spent. And all of these things combine to create the opportunity, which was then given a massive booster by COVID-19, because this demonstrated exactly what we mean by unrecognized nature-related risk. Most people think of COVID-19 as a health problem. It's not a health problem. It's an environmental problem. The causes that underlie the emergence of these zoonotic pandemics, which are repeated every few years, is because of environmental degradation, the trade in endangered species, the mixing of species together in certain areas, which lead to these jumps from animals to people. And in the past, people used to say, well, nature-related risk, that's not very big. I mean, it's mainly just about agriculture. If I talk to central banks and treasury departments, they used to say that. But COVID-19 has demonstrated how this has swept around the world. It's been very fast, and it affects all sectors. And in April last year, I wrote that it was going to cost the world about $10 trillion, and everybody said, that's far too much, we can't print that. And IMF is saying it's running at about $127 trillion right now. So this has been a massive wake-up call. It's super exciting to see this acceleration. But we don't have the right numbers. We don't have the dashboard on the dashboards of the terminals we all use to create our financial decisions, nor on the dashboards of big pension funds and big banks. We don't have the numbers for nature, and we might talk a bit more about that in this panel. But we're getting there.
Andrew, thank you. We'll come back to the framework and the metrics. Gilles, there is another parallel maybe we can draw between where we are today with biodiversity is maybe similar to where we were 5 years ago with the question of carbon. Is that pertinent?
I definitely think so. Thanks a lot for inviting me. Yes, when I think of how the financial industry in general is dealing with biodiversity right now, it's probably close to the situation in which we were 5-10 years ago with climate investing, in the sense that at the time we had a plethora of indicators, a plethora of concepts, of metrics, not that much data, and it took actually quite a bit of time before there was a sort of natural consensus building towards a common set of indicators, a common set of metrics, and nowadays everyone kind of focuses on a version or another of carbon intensity. We're not there yet on biodiversity. We're still dealing with 3 potential different approaches. The one we prefer at AXA, which is MSA, mean species abundance. You could look at profit and loss and environmental profit and loss. You could look at the cost to abate the loss of species diversity. So there is still this convergence to build. But we don't have much time, in the sense that we have to start now before this convergence happens for at least 3 reasons. First of all, just like Andrew was saying, clients want it. They want us to be able to present them with products which either embed biodiversity concerns in the way they're constructed, or which targets biodiversity impact. That's number 1. Number 2, regulators. We heard the minister a few minutes ago reminding us of what France is doing with Article 29 of the Energy and Climate Law, which is going to force us at the beginning of next year to report on our biodiversity footprint. So here we go. We need actually to say something. And the third element, and it's my last one, and sorry, it's probably my economist hat speaking here, but one of the reasons we definitely need to address it is very simply because a world which does not address the biodiversity issue is not going to be a world in which it's good to be invested in, very simply. Previous speakers mentioned a number of figures and projections. One I like is from the World Bank. If 3 ecosystems collapse in the next decades, it could be timber supply, fish supply, it could be pollination. The cost to global GDP by 2030 could be north of 2%. you don't want to be invested in a world which has a sort of horizon with a lower GDP in 10 years, only 10 years from now. So if we want to be the good stewards of the savings which our clients have entrusted us with, we need to be able to address biodiversity. We need to completely integrate this in our investment strategies. But again, at the moment, lots of diversity, lots of different paths. We need to converge.
Thank you, Gilles. And that leads us to the question of the risks associated with the loss of biodiversity, which is something that the NGFS is looking into alongside with climate. Jean, can you tell us more about this?
Yes, thank you, Pierre. I think for the members of the NGFS, so I mean it's 95 and counting central banks and supervisors, what matters to us is understanding what biodiversity means in the context of our mandates, be it price stability, be it financial stability, for some members, be it financial inclusions and so on. But that's very much the framework through which we are looking at these things. And there may be, I'd like to come back to the idea of we are five years behind. I think that we may be in between 10 and 5. And I would hope it's 5, but I fear it's closer to 10. Why 10? Because when we look at, COP15 in the climate world was Copenhagen. When I'm scanning for the first report from an institution that is a bit structured on the questions of climate-related risk, I think it's a Lehman report in 2007. And finally, when I look at the IPBES work, I fear that what we have in front of us is maybe closer to the IR4 than the IR5. And that matters a lot to us because as central banks, what we do is basically try to consider what the science is telling us and draw the conclusions or pull the thread right through what matters for us. So that's my 10 years assessment. On the 5-year side, what is very clear is that we have learned how to deal with a blind spot that we discover. So I think we have a blueprint for at least understanding how to look at this risk, recognizing the physical dimension on one hand, or the equivalent of the physical dimension on one hand, recognizing as well the risk implied by the regulations, the change in preferences and the like. So everything that we put under the transition risk at. So we know a lot better, but and still that's what we are working very hard on is as Marine was saying, making sure that we fully understand what it means, not because we just want to understand, but because it's the basis for us then to act. And when I say that there is a lot to do yet, it's because in the climate change, yes, a number of things were complicated. When you look at the physical risk side of things, you need to consider a number of others. It's not as simple as it could be. It's not just a temperature issue. So multidimensional, but on the transition side, it was very much, once you have understood that it boils down to CO2 and GHG, it was a lot easier to pull the thread. While in biodiversity, we are still lacking this kind of framework that enables us to understand the connection, and I would say the connections, clearly with an S, between the loss of biodiversity, the overexploitation of natural capital, and the economy. What motivates us to go very hard and very fast is that some members around the table are telling us that biodiversity losses is an issue that is more pressing for them than climate change. And when it's someone living on an island that is telling you that, you think twice, because climate change, they can very much see that on an almost daily basis. So if they tell us that their own fear, their own intuition is that biodiversity losses is even a bigger problem, then it gives us the energy to get the extra mile.
Okay, thank you very much. Thank you very much, Gilles. For this. let me circle back to the investment industry. Does this multidimensional aspect you just mentioned, Jean, is a rationale to specialize financial players on biodiversity, or do we need, on the contrary, to adopt a pervasive approach to inject biodiversity, first layer of biodiversity across the board in investment approaches? Maybe Marie-Hélène, you could start on this. I think that you are looking into the pervasive approach.
Yes, and what we're doing in this area and what is our approach. First of all, let me remind how we see the role of Public Development Bank in this area. We have measured recently, how much we represent, we being public development banks, in total investment flows, and we estimate this is around 10%, which is significant, but it's only 10%. So we see our role as, yes, filling the financing gap, of course, but also to help unlock additional financial flows in favor of projects and activities that will support, in this case, biodiversity and environmental protection projects. So in that respect, yes, the role of Public Development Bank and central banks is really to boost the ambition and also ensure the implementation of the global biodiversity framework. What we need to do is several things. The first one is to update our safeguards. We're using safeguard policies to address environmental and social risk in the way we select our projects. And biodiversity is already included in those safeguard policies, but these can be updated, and also increase ambition for biodiversity and achieve mainstreaming of biodiversity in all areas of development. That means, more precisely, as we say, greening finance and financing green. So in terms of greening finance, and as you said, the French and EU regulation now ask financial institutions to report on the biodiversity footprint. So we, as a
Article 29.
C'est ça, exactement. So we are a financial institution also, regulated in France, and so we are also working on measuring biodiversity-related financial risk that may affect the repayment capacity of our client. And when we do this, of course, it's not to stop working with these clients, but it's really to initiate a dialogue so that they also better acknowledge and reduce these risks. So it's really also a question of dialogue and education with our clients. And in that process, generating with them projects that can have positive impact on biodiversity. So that's in the area of greening finance. Financing green, then it's so really increasing financial flows towards project contributing to conservation. And that means for us working in all sectors. So of course, in terms of biodiversity, you can think very naturally of projects in agriculture, rural development, but what we're doing also is to really look for biodiversity components in many areas. So including in urban development, in water projects, of course. And that's also very important because when we do that in many sectors, we can also address how we can work both towards climate change mitigation and also towards biodiversity conservation. So our objective is to double biodiversity financing to reach €1 billion in 2025, and also work on aligning climate and biodiversity objectives. So the goal for AFD by 2025 is that half of our financing goes towards climate change projects, and 30% of that should be also projects with biodiversity co-benefits also by 2025.
Okay, so you will apply a layer of biodiversity of a much larger base of your financing. On the other hand, on the market, and Andrew, I know you have some views on this, but Gilles or Marine, please feel free to bounce on this. There are a number of specialized asset managers or investment firms which are specialized boutiques on capital natural or biodiversity, but they are too small today to really make a dent in the gap. They have only, on average, a couple of thousand millions under management. How can we move to much larger chunks of biodiversity investments under management?
Talking in the background to join the conversation, but I think you are right. I mean, there are plenty of there are plenty of boutique kind of finance institutions around, and like Mirova in Paris, owned by Natixis, Mirova Natural Capital, has been a pioneer in this, and but there are others. Pollination is a new one to come in, but the pools of capital that they deliver are relatively small, you know, in the scale of $100 to $200 million. But these are the pioneers. They have been pathfinding this process over a long time. And crucial in that is de-risking these investments. And this is really where development finance can really help by providing co-finance in blended funds, and in providing, governments can help through providing a floor price or guarantees. These sort of things really help crowd in extra finance. But what we really need is product that's at the scale of $500 million or more. There's very little at the $1 billion scale in this space yet. It will get there, and big lenders like, for instance, Rabobank in the Netherlands are looking at lending vehicles that provide cheaper money if you do the right thing as far as sustainability is concerned for farmers. And this is the way to go, but we're a long way off from that. So I think we're going to see an expansion of that sort of thing. One of the big missing pieces here is that we have large pools of government money, such as the Green Climate Fund, which is supposed to deliver 100 billion a year for climate. But when private money tries to access that money, the decision-making time required for government pools of money is far too long for the private sector in this space. So you know, private sector wants a decision in 6 months. A government decision might take 2 years. The private money walks away. And this has been a real problem in getting impact investment to scale up. So what we need is an accelerated pool of capital that can help de-risk private sector finance in this space, and that would accelerate things. In addition, of course, we need the framework, the metrics, ways of measuring whether we're winning or losing, and that's where I think the task force on nature-related financial disclosure will really help us in the future.
Thank you, Andrew. And Gilles, I understand that at AXA, as a designer and as a manager of investment funds, you have a multi-stage approach with respect to the inclusion of biodiversity. Can you elaborate on this for us?
Yes, so I speak on behalf of a big shop, so we're not a boutique, and what we try to do is start with the first step, which is, first do no harm. And the first do no harm is often based on exclusions. And this is something that we're applying actually on the vast array of our investments. And what we've been doing for years actually is to screen investment for palm oil. That was our first exclusion policy in the field of biodiversity. And we've extended it last year to other sources of threats to the biodiversity, timber, cattle, soy. So that's step number one. Exclude what is really absolutely harmful. And to be clear, it's real. It resulted in the ban of a bit more than 40 companies, 40 issuers. Then there's the active bit. And the active bit in the field of biodiversity for us is through our forest investment. So AXA IM manages roughly 60,000 hectares of forest in a sustainable manner on behalf of AXA Group. That's the active one. But the third step, and that will go beyond my firm, and I think it's a general issue for the entire industry, is to be able to go one step further, which would be to apply biodiversity criteria, biodiversity scoring on basically any issuer, any company coming to the market. That's the next step. So for this, I said earlier that we believe in the MSA approach, counting basically the number of species on specific territories. For this, we're working with Iceberg, that lab, in which we've taken a stake with several other French institutions. And basically what we're trying to do with them is to get a level of granularity in the data at each issuer level, which will allow us to do what we do best, which is to allocate capital. Our job is to allocate capital. And we want to be able to allocate this capital according to clear, quantifiable criteria, including biodiversity criteria. So, exclusion, forest, and thus this third step, having enough data to be able to tailor investment portfolios according to biodiversity criteria.
Thank you, Gilles, and that leads us to the question of. Sorry, Marine, you would like to add something? Yes,
there's an additional tool too. Within it is actually the engagement policy. When we lack data, I mean, we cannot wait to have all the tools to make fully informed decisions. And so engagement policy and biodiversity are actually key to start having that dialogue with companies, and not only in the easy ones, I would say, or the most obvious one, that would be better to say so, not only the agricultural sector, but all the value chains that are actually nature dependent, to come back to what I said earlier. I mean, 50% of the global economy is directly dependent to nature, so it's not only agriculture, it's not only timber. It's also chemicals, it's also pharmaceuticals, it's also distribution, etc. And we need to get that dialogue, and so biodiversity engagement policies are actually key to reallocate capital, the wider economy to...
But stemming from that, isn't the, and I'm sorry, I'm going to use a barbarism here, isn't the biodiversification of supply chain a very powerful lever?
It is.
And I think Andrew has some view on this too.
Yeah, it is absolutely key, and it's certainly where we lack data and metrics and framework and collective action. I would say that if we want to reallocate capital toward a more nature-positive economy, we need all that. We need data. I mean, for example, within HSBC, looking at our lending portfolio, our exposure to, I mean, not our exposure, our portfolio on agriculture, forestry, and fishery is 1.5% of our global portfolio. So with our sector policy, we very well address the direct risk. Thing is that deforestation risk, to come back to your point, is in the value chains of many others industry. And we need to capture that information to really be in a position to commit to be deforestation free. And those data are lacking. And so, yes, supply chain are absolutely key.
And thank you for chaining that to the next question. And please, Jean, I think this is primarily for you. When you mentioned the part of your loan portfolio, that's a percentage of the amount lended, but there is also to take into consideration the capital requirements, which are modulated by the risk. So, Jean, what can the regulator can do to encourage or maybe nudge the financial players? We mentioned Article 29, but there are other frameworks on the way.
Indeed. So I think the job of the financial institution is to allocate capital. My job as a regulator, or more precisely as a supervisor, is to regulate and supervise. So I would try to do my job well. Indeed, reporting can be, as we've seen in the French case, of the past 6 to 7 years, reporting can provide a very strong impetus in developing good practices. But maybe more specifically, and linking that back to my earlier point on, we are not exactly where we'd like to be. That doesn't mean that we don't and we can't act just right now. And we've been releasing a progress report on supervisory practices just today as the NGFS. A report in which you would see that 80% of the supervisors of the NGFS have, already concretely embedded climate-related risk into their own daily supervision. Beyond this 80% that have embedded climate, already 60% have started to consider either embedding just right now, and there are several members from the NGFS that are doing that very well. I think of people in Brazil, for example. So either they have already embedded that in their daily supervision, or they are in the process of doing so. And as I was saying, the energy and the momentum is really fast. So starting with supervisory expectation, that is focusing the mind of all the people we supervise. When we start to ask them, what is it exactly that you understand about this risk? That's the beginning of the conversation. You need not go, jump straight to the capital charges. But another one, I think, something we've learned from the climate discussion is stress testing. If you want to understand exactly what the problem we have right before us, we need to have this kind of exercise to basically understand the correlation between the risk, the codependencies between various sectors. When I say climate stress test, you need to understand that it's a collective journey. It's a way for us to understand the problem. It's a way also to accelerate the capacity building in the financial sector. And eventually, indeed, it's a need to have when it comes to supervising and taking hard decisions with regard to, let's say, capital, even though we are not there yet.
Okay, but climate stress testing has been done, I think, a series of that has been done last year, I think. It took a long time to prepare it and be ready. Are we going to be ready in the near future for biodiversity stress testing?
We're working as fast as we can, and the work that is currently ongoing, which is an exploratory work, is clearly pointing at the need of building this kind of scenarios, because it's the only way to aggregate up the micro information or the micro understanding that we have on the ground. Yes, it took some time to translate the IPCC scenarios into NGFS scenarios. I hope it will take less time, but I'm very conscious that there is still a big learning curve to climb here. Okay.
Another factor that we see, and I'm thinking of the tech industry here, is the use of public finance to de-risk the projects and to create a leverage effect with private capital. Jean, maybe you have a view on this, or maybe Marie-Hélène, AFD can catalyze that kind of leverage.
Yes, well, as I mentioned, this is the issue of how we can, as public banks, have a leverage effect on capital flows more globally. I think, and this is what we have done in many areas, to use blended finance, in fact, to de-risk either through guarantees or subsidies to help address some innovative or high-impact sectors and projects. This is something that I think we still need to work on. For the moment, I think what we're doing is really work on projects that can act as proof of concept for larger use. But as we know, this is still a challenge, how we can scale up projects that works, that have positive impacts. And also use on work on tools and methodologies, and the TNFD was mentioned in the introduction, and clearly we hope to play that role so that common methodology and disclosure can be shared, so that we have a common understanding of what we're doing and how we can move forward.
Okay. Thank you, Marie-Hélène. Andrew, from the point of view of Global Canopy, would you be in favor of other public measures such as tax or pricing or on certain goods and services on top of voluntary measures?
Well, using tax is really difficult to solve these problems because if it's not tax neutral for the public, then you get gilets jaunes in the street because I think you understand what I mean. So when you apply these it's not so much removing taxes or removing subsidies. And just remember, I don't know if I mentioned it earlier, that subsidies that harm nature are currently about 5 times bigger than all the finance provided by governments to protect nature. So even if you doubled all the money from governments, we wouldn't get close to what the subsidies are doing that create harm to nature. Well, it's not about removing these things, it's about realigning them, changing the incentives. So, if you've got organic food, wouldn't it be nice if you paid less tax for that? And food that was bad for you and you ended up in hospital because you got diabetes, well, maybe that should be taxed higher. But in the end, it should be neutral to the customer and to the government. They don't want to lose out on taxes. So you can see the problem arising in the future as we move from petrol cars to electric cars. Government's going to lose a lot of tax because we aren't going to be buying so much petrol. So these sorts of things really need to be thought through. So I think the tax system is quite difficult. I just want to in case I don't get another opportunity, to mention that data is super important. It's fantastic what Iceberg Data Lab are doing and others to try and come up with this, but we need a framework. It's like with climate, it's like we've taken the first step in the room with dealing with these externalities that are out there. And what you need is a pathway through the woods. Well, the climate framework does that. And we need a nature framework to do the same. So TNFD has been constructed to try and look at the risks, the data, the metrics, to pilot new technologies and come up with a beta framework very early next year for dealing with nature-related risk in financial institutions and the companies they invest or lend to. It'll be a 2 to 3 year process. We've got a fantastic group of individuals within companies that are helping to do this. And it'll be the same sort of framework as the one for climate. So businesses who are besieged by these sorts of disclosure frameworks will find it very easy to do. But the methodology underneath is not easy. We've got a lot of work to do. We don't have a ton of carbon, like a currency to measure progress. We don't have targets like 2 degrees for nature. And Elizabeth, who spoke so eloquently at the beginning, has the daunting responsibility of, in a sense, coming up with these next year. Good progress in Kunming, but the global biodiversity framework needs to have a role for the finance sector. It needs to get in there and be part of this transition that we need to undertake. So I hope that TNFD will give us the pathway. We're seeing a remarkable awakening of understanding about this. And it was very interesting to hear that some members of NGFS are saying, biodiversity risk actually is more day-to-day for us than maybe climate. So, well, that's true. It's happening right now and affects so many people. So I think we're on the right track. It's not going to happen overnight. I think he's probably right. It's going to be a decade. I wish it wasn't. But I do think that within a decade from now, there'll be countries that are saying that you have to use a TNFD as a mandatory framework, just like for climate, that Paris is already doing in Article 29 next year. This is the kind of leadership we need from governments as well. It shouldn't be Paris alone. We need more Paris leadership around the world. So let's look forward to what will happen.
Thank you, Andrew. And the long-awaited TNFD will certainly provide much-needed clarity and guidance around frameworks and metrics. There are other frameworks that are coming. Well, French Article 29 is already on track. There is also the European Taxonomy and other initiatives around the world that could be used as mandatory frameworks. And as well, voluntary initiative. We'll come back to that in a moment with you, Marine. Do you think the European taxonomy in its environmental objectives can also help tackle the issue, at least in the Euro zone?
I can take the question. I mean, for the biodiversity pillar, I would say, of the EU taxonomy, I mean, you know that it has not been fully released yet. I mean, it's we have been consulted during this summer, and it's actually, I think, very powerful to, again, help reallocate capital toward biodiversity resilient economy, because it actually helps understand what are the solutions, what are the harmful sectors, and also what are the enabling ones. And we all know that investors and financing institutions will actually embed those information that we will then get from companies to assess and address our financings and investment going forward. So yes, I think it's a very good news to have within the EU taxonomy part that are actually completely dedicated to biodiversity. There are other frameworks, actually, and I think you wanted me to touch on that. I mean, for a very long time, the way we have addressed those issues was actually to rely on external certification. We have touched on that. I mean, you did, Gilles, with the FSC for forests, with the RSPO, and other ones on soil, etc. It's key. And certainly, Andrew, you talked a lot about TNFD. We understand that those certifications help tackle risks up to a certain level, and now we need to embed it into our entire risk framework, and TNFD will help us on that. And I would say that for this issue and for the others, we certainly need those collective actions. We cannot do it by ourselves. We can read all the reports from the NGFS and other great institutions, UNCBD, etc. We need to work together to translate it into something that we can embed in our companies. There are other very meaningful collective actions, and I want to mention two, I would say. The Finance for Biodiversity Pledge is also a very great collective action to work together to commit to tackle biodiversity loss risks. And there's also one that is just emerging, that is Get to Nature Positive, which aims is also to share knowledge around strategy, risks, etc., to get the economy to a nature positive one.
Thank you, Marine. Gilles, you wanted to add something just before we come to a conclusion, because time is flying.
Very, very quickly. First on TNFD, absolutely agree. AXA is very committed to this initiative. One of the reasons is because it's global in reach. And that is something we need to keep in mind. As much as I'm proud to be French, because with Article 29, we're actually setting, I think, that the pace. I'm also proud to be European, because the EU is doing a lot and in advance of many other regions in this field. But the solution to this is global. And the risk is that if, in a way, we go our own way without reaching out to regions which are not as advanced as we are on this project, we run the risk of creating a plethora of standards, plethora of indicators. And for global investors like ourselves, it's not going to be an easy feat, and it's going to be counterproductive in terms of trying to deal with threats to biodiversity.
Jean?
Yes, maybe to echo a lot of what has just been said, and to react to this question that is very, I mean, front and center to our work. This question of fragmentation, and also the fact that these are very difficult questions. I think one of the fundamental intuition of the NGFS is twofold: is that this problem is just too big for any one of us to tackle it on our own. So we need to collaborate, and that has been honestly a success. And because we are coming from many places, I mean, 95 members around the table brings a lot of different perspective to that. And I think this global collaboration is indeed very conducive of avoiding that, because what we do when it comes to understanding what it means to supervise environmental risk is, sit down. And here our Brazilian colleague, our Malaysian colleague, our Indonesian colleague, to name a few that have already started to work on that, and say, okay, what's the best practices that gets out of that. And because we have the chance to start the process, you know, from the ground up and in a very collaborative way, I think we have a recipe, or I hope we have a recipe to avoid indeed this fragmentation and people coming to the table saying, I have my own solution, and this is the one that you should adopt, which divert a lot of energy when it comes to finding solutions.
Okay, thank you very much, and thank you all. I think we are coming to an end of this roundtable. So I think the key word for around these last comments is really collaboration. Collaboration to try to emerge or define a common standard, even if it's not optimal to start with. But as many of you said, let's not wait to have the perfect framework and the perfect metrics before starting the race. Thank you very much. Thank you to all of our audience here at Palais Brognard or remotely for being with us. And thank you very much.